Hello, hello. Thank you so much for joining, everyone. How's it going? So, the markets are kind of flat, not doing much at this point. It's selling off right now. So, let's see how the rest of the day plays out. The overnight session, we had some whipsaw operation went on with what happened with Bank of Japan. I understand there is a lot of questions going around with what's going on and what happened with it. So we'll first talk about it and then we'll move on to SPY. We still have like 1 hour to go before the market open. So this is what we're looking at is the S&P 500 futures contract. So if I go to the 5-minute charts and kind of zoomed in right here, you can see the big drop which happened overnight as soon as the Bank of Japan announced something called yield curve control. It's pretty simple actually. Right now, as you know, the US economy, we are under something called as inflation, right? Where when you go to the store and start buying stuff, you must have noticed the prices of stuff went a lot higher, crazy higher compared to that of 2 years back, right? If you especially run a business, it's even more clear for you because you must have seen that taking fold when you buy stuff from your suppliers, right? The cost of everything, the raw materials or whatever you buy, skyrocketed to the upside. So that is inflation. And now, if you went to Japan, the economy is totally different. Japan has been in a deflationary environment where, like, people don't want to spend. Imagine that. They have been in a deflation for almost like for decades. Since the crash happened in .com, they were in deflation ever since. So the Bank of Japan has been doing this quantitative easing to actually increase the inflation. Do you remember the one which the Federal Reserve did after the 2020 crash, the money printer? Yeah, they've been doing that for quite a long time now, Bank of Japan. But the reason why they do it is to bring up the inflation, unlike what the Federal Reserve is doing right now. So when a deflationary economy, an economy which was a deflation for quite some time, came forward and told you that they are increasing their interest rates because inflation is a big concern, now that is something to be worried about. That's what happened, and that's what caused this big drawdown to the downside. So we were trading at around 38.50 and we dropped all the way to 38.05. There was like a 50-point drop in S&P 500. So that's exactly what happened. So an economy which was in a deflation for years, for decades, came out saying that they are now concerned about inflation, and now they are about to increase the interest rates. So Japan had this zero yield curve control is what we call it. Yield curve is like if you buy a property, you'll be taking a 10-year mortgage or 30-year mortgage, right? So technically the interest rates of that 10 years should be less compared to that of the 30 years. So when the 10-year interest rates goes higher than the 30-year and 5-year interest rates goes higher than the 10-year, we get something called as yield curve inversion. And the fun fact is, every time we get to see this yield curve inverts, we always got a recession 6 to 7 months later. We inverted in our yield curve at the beginning of 2022. So the Bank of Japan has been like going into this quantitative easing for quite a while now, for quite a while. Markets were expecting them to increase interest rates, but they weren't expecting them to increase it to like 0.50%. So yeah, simply put, what scared the markets is if a country like Japan is concerned about inflation and increasing the interest rates, imagine what the Federal Reserve would do. Imagine what Christine Lagarde of Eurozone will do. So this is the main concern which caused the ripple effect, not only in US markets. Nikkei was down, the Japan stock index is down like almost 2.5% today, and the dollar absolutely collapsed. You can go and check out Dixie. As soon as the news released, you saw a massive sell-off in the dollar. If you're doubtful why this happened, this big drawdown happened, because the Japanese yen strengthened. Because by this time, like talking about Forex, I don't want to get deeper into it, so I'll just go over the basics. The currencies always trade by pairs. For example, if you have dollar, it'll be trading against, let's say, yen of Japan. If you're taking dollar, and it'll be trading against yuan. So they always trade by pairs. So when one currency pair strengthens, the other automatically weakens. So that's how it works. So what happened is, after this news, the yen, Japanese yen, absolutely skyrocketed, which caused a massive drawdown in Dixie. When yen strengthens, Dixie falls. Simple as that. So this happened. This is what happened overnight. That's what caused a sell-off. And now we hit that level at 38.05. This was an important area. So we're talking about 375-ish in SPY, more 375.40 more or less. We hit that level and we bounced. So leading into today, if we do sell off, this area is going to be an area of importance. So which is around 38.05 and change. And now let's go back to SPY and compare it with our morning notes and explain a bit further on what to expect into today. Today's price action is fairly simple, to be honest. So as long as they stay under 380, bears have the advantage here, because they can push the price all the way down to run a test to yesterday's lows at 278. And if they break under, watch out for that 375.40, which is around 38.05, remember, to be tested pretty soon. So that is the bear case leading into today. 380 is important. Breaking under it, watch out for 378, which was yesterday's lows. Breaking under 378, watch out for that 375.40 and change to be tested. So that is the bear case for today at least. So what about the turnaround operation? Let's say like the bulls got a bit too strong and they broke our close candles above this yesterday's last candle high, which is around 380.38 or 380.38 and change, right? Now that opens doors for that turnaround Tuesday operation. If they pushed about 380, watch out for a spike to 380.83. Above it, they're going to push it all the way to 382.50 and change to the upside. 382.50 comes first, and after that, this AVWAP, which is at around 384.69 and change. Pretty simple day today to trade SPY particular. Under 380, bearish, about 380.83 or 380.36, let's say 380.36. Watch out for 382.50 and 384.60 to be tested to the upside. So to the downside, we have to go to the ES chart. So this is why it's important to keep an eye out for what happened in the overnight sessions, because leading into today, this level is important, because after selling off quite a bit from bad news, I mean, it's not technically a bad news long term considering, because they had to do it. They had to do it now. They had to increase the interest rates now to slam down on inflation, to destroy the demand, push us into a recession so we can have some nice bull markets in at least 2024. But for now, short-term basis, market's not ready for it. Market wasn't ready for it before for Bank of Japan to increase interest rates, but here we go. It was a surprise which pushed the markets down. But even after that, they found support at this area, which is at 38.05, which makes it an important spot leading into today. This 38.05 is 375.40 equivalent in SPY. If we do get here, we will see a bounce. There is a high probable chance for us seeing a bounce in the other direction. So watch out for that. So if you want to go calls, 375.44 is a great area to buy calls for a decent risk to reward. But my initial target still remains at 372 and change, and I'll tell you why. Been seeing a lot of comments about the double tops. Is this a double top? Is that a double top? All those questions, right? This, you can see, is indeed one. Because you can see the SPY first testing 410. They got rejected. Came all the way back down to bounce from what number? 391.99, give or take. They went all the way back up again to run a test to that 410 again, got rejected, broke down under the neckline, which gives you the confirmation for an actual double top. That's why I've been saying it for weeks. If SPY breaks down under 390, it is bearish, go short. Until then, they're just going to consolidate to the back and forth dance. They broke under 390. Now look at where the price is at. It was almost like a 11 points move to the downside in SPY from 390 break. So let me say why 372 is important. So this is how you actually calculate the distance from the double top, right? Like you go through the highs and then draw the line all the way to the neckline, which is somewhere around, let's say, 391. All right, and let me double click on it and then remove the extended lines. All right, so now once this is done, you just drag it and then drop it right under, which puts us directly in touch with 372.93 and change, then around that area more or less, which this area, you can see the importance of that area to understand there are no accidents here, because that is also the lows of this breakout candle. This is the weekly charts we are looking at. If I zoom out a bit, Jesus Christ, come on. Yep, there we go. Yep, so you can see this was a big breakout candle in SPY. They might come all the way back down to run a test to the lows of this candle, which is at around 372.93. That area also acted as support multiple times. 1, 2, 3, bounce, 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 bounce. Multiple times around that same area, which also marks the bottom of this double top. So if they give me 375, well, yes, good for longs, at least for today. But if they give me 372, that's the place where you can expect buyers to show up for a potential counter rally bounce to at least around 3800 or somewhere around 3850-ish and change, all the way to like 384. From 372 to 384, another 10-point rally. There's nothing to complain about there. So maybe that's the Santa rally which every bulls is expecting now. And it's just funny because like Santa rally, bulls want SPY to rally at the end. They never expect from what point they want it to rally. Right now, there is no indication for a reversal to the upside. It is terribly bad looking charts. There was no confirmation that the buyers are actually even thinking of stepping in. We are selling off in a terribly low volume as well. That is another problem because the liquidity is getting lesser and lesser as the day passes by. That's a big issue, and which increases the risk of a limit down capitulation type of sell-off, aka I wouldn't call it a crash, but capitulation in the sense like, okay, if you have your trading view charts open, I want you guys to go and take a look at what happened on Jan 24th, and I want you guys to take a look at what happened on Feb 24th. Let me go ahead and show you. I'm talking about 2022, by the way. Let's go. So this is a capitulation move. Feb 24th, look at the size of this candle. They opened the day all the way at 410. Massive sell-off. They closed the day at 421 on 23rd. They opened the markets on 24th. They opened from 421. They opened at 410. That was a 10-point drop even before the market opened. So that is capitulation. They were like, buyers were like, nope, we're not buying it. But sellers were like, yeah, we're going to sell the fuck out of this chart. Like, we don't care. Once the market opened, buyers stepped in with a huge volume. They pushed it to the upside. Days like this marks the reversal candles. You see the big green candle, it always follows up with continuation. You can see something much similar happening a while back. You see this, remember this? I know most of you guys remember this. This was the time where they reported harder than expected CPI. Every single bears were like, oh, the market is going to crash. Oh, it did crash. But the buyer stepped in and scooped it all up. 340 and closed the day all the way up at 365. Every single time you see candles like this, it will always be followed. Not always, at least 80% of the time. In market terms, that's a great probability of working out. Every single time when you see candles like this, we call it reversal candle for a reason. It always ends up with a follow through. This is the time you should see all the bears, like we're going to 3200 in SPY, we're not going to go anywhere up. SPY is going to 300, SPY is going to 340. Nope. They came back to run a test to 356 and then went all the way to 410. If you were short here and expecting SPY to go all the way to 320 or 300, well, I do believe it's still possible, but time frame matters, right? Especially with options, you can't trade options. You got to be right with time, you got to be right with price. They ran a test to 356 and then took right off all the way to 410. 340 to 410 is like $70 move in SPY. $70. Not even 70 fucking dollars in two months. It's insane. They got rejected there, now they're coming back. Now 372. This is where we keep our eyes on in case of SPY. Something to expect for a counter rally bounce. If they do sell off today, watch out for them to do something like this. 372. There is a support at 375, of course, but I'm watching for 372. 372 and change, and then rally all the way back up to 380, come back to 375, go back to 384, and then close the year at around 390. This is the bull case scenario. Potential bull case scenario. If something like Santa rally happens, like these bulls are fantasizing and jerking off, this is one of the scenarios which has high probability of playing out. So leading into today, at least, as I said earlier, if you're new to the stream, thank you so much for joining. Subscribe. What are you doing? Go ahead. Go ahead, subscribe to the channel, leave a like. Really appreciate it. So leading into today, let's draw the line at 375.40. That's the number which we got. 375.40 is going to be an important number to the downside, at least for today. So if they break under 378, watch out for 375.40. Why is PayPal here? I didn't ask you to show up. Go away. There it is. Yep. 375.40 to the upside, to the downside in case of a bear case playing out. Yesterday's lows is the first area of support where you can expect some bounce at. If you're a scalper in SPY, at least 378.35, they can see a small bit of a bounce. If they break under 375.42, it is. If they break under, we'll get to our target. If they give the target to me by today, I'll gladly go long. It is risky, but this is a risk business. We got to take some risks. I know there are no signs. I know that I've been bitching about there's no signs, but my plan for now is to go long at 373, 372.92, around that area. If bulls offer me that, I would go long with both hands, easy. I personally don't like to scalp SPY. I know most of you guys are working 9 to 5. You can't keep an eye out for the markets every 2 minutes once. If that's the case, these are the type of trades which you need to take. You don't have to like work and then scalp at the same time. It's nearly impossible. I've been there. So if you're working 9 to 5 and if you can't trade SPY on a daily basis, ignore the 2-day expiration contracts, ignore the 1-week expiration contracts. Just wait for SPY to hit the levels. Only take limited amount of trades. You don't have to keep an eye out for it every single day. You just buy it, hold on to it, and once it hits 380 from 372, you sell half of your position, and once you hit like 384, you get out of your position completely. That's it, done. And then you come back and wait for SPY to hit 390 again so you can go short again. So this is how you play the markets. You wait for the setups and you don't trade until that setup is offered. This is my plan. You can have your own plan. So if you have your own plan, wait for it to work out instead of like being early on it. So the trades which I'm watching for today is, first one is SI, Silvergate Capital. It's something I'm keeping an eye out for. They bounced off from the 1681 to 1650 demand zone. So let me tell you why this level is important leading into today. Because if you go to the weekly charts of SI, you can see the highs. When they IPO'd or when they went public in the beginning, they sold off like a lot. The RSI is pretty low. I mean, this RSI doesn't matter much, but price does, but still. Something to keep an eye out for, like just adding up to the probability. This zone is a demand zone for SI into today or forever, to be honest. Until they break under it, we are going to find support. If you zoom out, they have been absolutely destroyed in the past few months. The last 2 months alone, they sold off from 107 to $17. We have been short on this stock since it was around 27-ish. We're kind of a bit late, but it doesn't matter. We still captured $10 to the downside. But still, $16 is pretty important. So the place where you can expect some bounce on. So you can set your stop losses at the closing candles under this demand zone, and you can actually take long term, like at least like 2 weeks out calls. I'm not asking you to go long, like buy shares and hold it forever. No, you don't hold anything forever. So just like capturing the bounce in a counter trend rally with call options sort of thing. So this is something which I'm keeping an eye out for today. If they offer a retest around this zone, I would look for long term, at least for 2 weeks out options like $17 strike or $16 strike calls. This is personally I'm looking for. You could do limit orders in those situations as well. Yeah, of course you can. Like if you're especially trading with shares, some people trade with shares, some people trade with options. If you're trading with shares, you can just set up a limit order on SI and you can just go ahead with it. Like 1680 to 1650 is still the demand zone. I know a lot of people are asking questions about what are supply and demand. It's simple. Supply is what we call as resistance. Demand is what we call as support. There's a lot of complicated words going on around for supply and demand, but to put it simple, that's all it is. In demand zone, you'll find buyers. In supply zone, you'll find sellers. Most high probability of sellers will be present around that zone. So over here, at least where's the target will be, if they do come all the way to 16 and bounce, I'm expecting a bounce at least to $23 to $25. That's like a $7 move to the upside from where it is trading at right now. But of course, the broader markets need to cooperate. So if they do just consolidate around this area for a while and SPY hits 372, and then they started bouncing to the upside along with SPY, well, watch out for $23. Good risk to reward. You're technically risking like 30 to 40 cents, literally 40 cents, which is like around $30 if you pick an in-the-money contract, to make like around $7 to the upside. So these are the type of trades which you need to be, good risk to reward, but you do you. I'm looking to swing this, not gonna scalp it on a daily basis. So swinging it is, for a swing trade to the upside, this is a good thing to look out for. SI ticker. Now let's go to another ticker which I am actually or I'm still holding the shorts on, which is ZM, Zoom. Yesterday I went short on this when they broke under 70 or got rejected and failed at 70. Now watch out, this thing has no solid support until 65. So that's something to keep an eye out for. If they break under or open under the lows of 68.99, I guess that's the lows, all like 52-week lows, which is around 68.88. If they open under it, watch out, they can get all the way down to $65 to run a test to that area. So if you're trading any tech-related stocks, I highly recommend keeping an eye out for QQQ, because NASDAQ is where this trades on. So if QQQ is in support and you go short on techs, most likely you're going to get your face ripped off in a rally. So something to keep an eye out for before shorting or longing any tech. For example, if you're trading Apple, most of you guys, I know you guys trade Apple a lot. If you're trading Apple a lot, you can't do that without seeing QQQ. If QQQ is at support, and Apple, if you go short on Apple, which is one of the major components of QQQ, and if QQQ is bouncing, there is a high chance that Apple is going to go higher along with it. We call it ETFization. So when you're trading any tech stocks, shorting or longing any tech stocks, always keep an eye out for NASDAQ. SPY and QQQ should be there in your charts all the time while you're trading any equities which is trading under SPY and QQQ. S&P 500 has 500 stocks in it with multiple sectors. If you're trading banks, you got to keep an eye out for SPY. If you're trading tech, you got to keep an eye out for SPY. Anything, healthcare, biotech, doesn't matter. Always keep an eye out for the price action on SPY. There will be relative strength in certain stocks when the market is falling. There will be relative strength in certain sectors. So keep an eye out for it and go long. Do not go long when the market is looking weak on individual equities. Do not trust the breakouts in particular when the market is looking weak, because breakouts always tend to fail in a bear market. Something to keep an eye out for. Not always, but most of the time. So something to keep an eye out for. So if you're trading NASDAQ today, it's a pretty simple day, to be honest. Like under 270, you're most likely going to fill that gap at 267 and change. Wait, what's going on? Wait, what? I think my trading view crashed. Amazing. Exit full screen. Interesting. All right, so as I was saying, so inputs on Tesla. For Tesla, 150 was pretty important level to keep an eye out for. And if they break under 115, I don't like Tesla longs until I see 137 gap fill at least. So let me fix this mouse. Just give me a minute. This is being really annoying. All right, there we go. Problem solved. Amazing. All right, so if you're looking at Tesla, watch out for 150. As I said, there is a big gap to be filled on Tesla. We're looking at the daily chart. And if they do go under this gap, I don't like to go long or short Tesla here. Like if you're not short yet, I would wait for a while. And if you want to go long, watch out for 137. If you go all the way to the back here, if you go back, zoom out, November of 2020, November 16th to November 17th, there is a big gap upon Tesla. That gap most likely will be filled. All the way, it goes all the way down to 137 and change to the downside. So if they offer 137, or even better, if they offer around 120, or even better, if they offer around 109, these are certain levels where you can find buyers on. So if you don't like it at 137, you can always wait. This trend is always in your favor. It's always going to see lower prices. This is one of the stocks which I expect to be getting absolutely destroyed in 2023. I won't be surprised if we see $90. I won't be surprised if we see $60 in Tesla in 2023. Well, we never know, but still. This is one of the stocks which I'm eyeing for an absolute collapse in 2023. Might be wrong, but there is a decent chance for that to happening. So something to keep a note on. So first, let's go on to Netflix. Oh, all right. I'm sorry, I went on a rant about Tesla. Yeah, for at least for today, you got to keep an eye out. If you're trading Tesla today, I would just wait, hold on for it for a while to see at least 137, this gap to be filled to the downside. And if you see that gap filled, you can go long over there. The decent probability to expect a counter rally bounce at around 137 to 138 area. So until that offered, I don't like buying calls in Tesla, and I don't like shorting Tesla either over here. But especially for short term, if you want a long term puts, you can go ahead but make sure to close it, because the short squeeze in Tesla is absolutely deadly. So don't get caught up with the trap. So Netflix and FLX, let's go over. Right, so Netflix is something interesting. The beautiful thing about Netflix is look at where they rejected at. So if I go to the daily charts and zoom out for you, you can clearly see they filled that gap, couldn't break above the gap, and got absolutely reversed at the same time. There we go. The gap fill happened, couldn't break above it, which was around 332 and change. Do you remember this gap down? The biggest earnings disappointment. They gapped down like almost 20 to 30% at that day. So they filled that gap around that area and now reversing completely. So now if I draw a trend line from the lows here, let me see. I don't trade Netflix a lot, so let me do the analysis right in front of you guys. All right, so let's draw a trend line right over here, right, from the lows. So you can see that it had a range for a while. From the top, we'll draw another trend line over here. There is another trend going on. So there's this. So you can see there was a range bound session inside the channel, which has been happening. They broke under it. So for now, I wouldn't be surprised if they see 255 again. 255, if you are in long Netflix, yeah, if NASDAQ keeps selling off, well, 255 is some area where you can find potential buyers on. Leading into today at least, you can find some support at 277 and change, which was the lows a few days back. If they break under 277, watch out for that 266 zone. Under 266, 255 is going to act like a magnet. So if you want to go long on Netflix, I would wait for this 255 to 252 zone to be tested as support. Let's show a demand zone around this area, right? So that was the top area where we got rejected multiple times over and over. That was the opening print of that demand zone as well. So all right, there we go. Let's draw it like here. Yep. So when Netflix gets to this zone, which is around 254.47 all the way down to 250, those are certain places where you can take the risk and try longs on. So this is what I think of Netflix. I'm not bullish on this chart. Nothing to say good about. Almost all the tech companies are looking like shit right now. Meta, Netflix, Google, Amazon, everything. Nothing to be bullish on any of them until proven otherwise. Like guilty until proven otherwise sort of thing. Can we also hear about Nasdaq? I just spoke about Nasdaq a bit back, but right now, to put it simple, 270 is important in QQQ. If they break under it, watch out for them to fill this gap all the way to 267. Breaking under 267, they're going to go all the way down to test 264 and change, 263.41 and change. So something to keep an eye out for. They fill the gap and start pummeling lower. 264 is the next big area. If they break it, 260, 259.32 and change. Yeah, see, you're saying you're looking to short. I don't know your time frame. So if you're doing it with options, I would recommend at least like giving you some time. But if you're going short on shares, manage the risk wisely. That's it. Can we talk Nvidia? Oh, semiconductor ETF just broke under the lows yesterday. So I should be having my levels for Nvidia over here. All right, fuck off. Nvidia, let's go ahead and check it out. There we go. God damn, it's a lot of lines. I got to redo my chart. Oh, it doesn't matter. Let's zoom in. Yep. For Nvidia, it's pretty simple. They are in this sloping trend line to the upside. Watch out for them to break it. If you want to go short, like let's draw a trend line from here, shall we? They're having this small uptrend going around, and they closed right at it yesterday. So if they break under it, I won't be surprised to see Nvidia testing the lows here, which is around 151 and change. Something to keep an eye out for. The tech is looking nasty. The semiconductor ETF in itself is looking nasty. They just broke under the range. So if you're looking to short Nvidia, 155 is the first area of support, and under it, watch out for the lows, which is around 151 and change. SQQQ. I mean, if you know the QQQ, it's going to be the same for SQQQ as well, mate. So no difference. So it's just a short triple leveraged ETF. It's going to follow QQQ regardless. So the same levels apply. So if you want to go long on SQQQ, which is the opposite of QQQ, just take a look at QQQ directly. So if QQQ is going lower, break under the 267 levels, you can buy calls on SQQQ, and you can sell them for profit when QQQ actually hits around 264 and change. It's totally opposite. So as long as you keep an eye out for QQQ, it's a similar chart. It's just the opposite of it. Right, so what is Nucor? What is that? NUCOR. Oof, nice. Let's see what it's doing. So there is a signs of trend change here. Let's go to the weekly charts first, see what's going on. I wouldn't call it the best looking chart. I wouldn't call it so worst looking chart either. But looking at it, there is a support area around here, zone around 126 and change. That's like an important area to keep an that's an important area to keep an eye out for. Let me draw the support. I never traded this before. So the first area of support, which is around 126.54. Interesting spot that is. If they break under it, they might come all the way down to run a test to this trend line, which they are at right over here. If you connect this trend line here up and about, there it is. All right, so if they break 126, they can come all the way down to 133-ish. Let's see, 118 to 113-ish mostly. So it's not looking good. Last week's candle is not something which you'd like to see, because they took off 5 weeks of gains in just one candle. So it's not a bullish look. It's a reversal candle. So we might see more downside. So for now, the short-term target still remains at 126.50. If they break under it, they can come all the way down to run a test to this trend line, which has been sloping to the upside, currently coinciding around with 113-ish zones. So, yep, 126 is the first level to watch out for. Under it, watch out for this trend line to act as support. It's not a bullish looking chart. This is not a bullish looking candle. Nothing screams bullish about this. They broke the range which they were trading at, which was around 145 all the way to 154. Once I've spoken about this before in the Discord multiple times. If you see a chart breaking the range and selling off to the downside, that is alarming. If you see a chart breaking above the range and then marching, that is bullish. Range bound sessions, breakdowns will always result in a massive sell-off. So something to keep an eye out for. I can give you guys another example for the same setup. You can see the consolidation, breakdown, and then a massive sell-off. Go to TSM, check this one out. They have been consolidating between 76 and 83. Well, they broke down. Look at what happened. 78 all the way to 75, and they might come all the way back down to fill this gap again at $73. And let's go to SMH, which is the semiconductor ETF. Same setup, consolidation, breakdown. Now they can go all the way down to find support at 203, or they can go all the way down to fill this gap at 196 as well. So these are all some things which you can keep an eye out for. These are the type of setup, like once the stock gaps down under this range, it's a short, it's a puts territory immediately with the stops at closing candles above this range. This is how you pick the trades. You got to wait for good setups. You got to wait for good setups. Like these range-bound trades, range-bound setups offer decent trades because the risk is absolutely defined. Because, for example, if you buy puts at breaking under 212, you can always set your stops at 213 or something, because by that time you know that they recaptured the range. Once they recapture the range, you know that they're going to go all the way back up to the top of the range again, so you can just cut it for a small loss. So technically you'll be losing like $60 to the maximum. One delta, if you took even in the money options, let's say $70 maximum per contract, that is. But if it falls lower, imagine the risk to reward. Let's say the SMH goes all the way to like 196. From 212 to 196, that's like more than 14 points move to the downside. With options, imagine that amount of gain. You're risking $1 to make like $14 in options. $14 in options. If you have traded earnings and then if a stock gap down like $14-ish, you know how much those contracts appreciate in value. So these are the setups which you want to be in, instead of scalping for pennies and like $10, $20 and saying profit is profit. No, fuck that. You got to wait for setups like this. If you don't see setups like this, you don't have to trade. Like, take a break until you find setups like this. You don't have to trade every single day. So you don't have to scalp every single day. Like if you're new to the markets in particular, stop scalping, stop day trading. You don't know technical analysis, don't day trade. Just swing it. Like, wait for a position and swing it. Oh no, market is so volatile, I can't swing. No, these types of setups are meant to be swung. Like, yeah, like strictly flex, market is so volatile, right? Look at this. This was a multi-year breakout on flex. 1960. Markets were down like a lot from this breakout point. Look at what happened once they broke out here. From $19, they went all the way to 23. This is a slow moving stock, but still, that was a 4-point move. And with options, the premiums and the options are dead cheap on this. A $4 move in these types of stocks will absolutely rocket the premiums in the options. So technically, you're risking breaking under $18. If you enter at 1950, let's say, you're putting your stop losses at $19. Technically, you're risking 50 cents, which is not even one full delta. If you take an in the money $19 calls, the delta will be around, let's say, $65. If the stock moves 50 cents to the downside, the most you will lose per contract is $30. You're risking $30 to make as high as $4 in this contract. Markets were down, yeah, but the trend of this stock is up. This is called relative strength. Even though the markets are down, there will be certain stocks which will be showing strength. Those are the type of stocks which you need to buy calls and swing. You can't buy calls in stocks like this. Check this out. Why will you even buy calls for swing on this, especially when there is no signs of reversal? Tesla. No. If the market, let's say tomorrow morning when you wake up, the market is down 2%, the Tesla is going to be down 4%. But when you go long on stocks like this, for the past few days, you can see how much the market is down. The markets were down from 410 all the way to 370. This was in a bull trend. This stock was down from $23 to like $21.50. $2 down. $2, that's all it is. And let's go to other setups, right, which was actually in a bull trend. Let's go to Monster Energy Drink, MNST. This was in a bull trend, new all-time highs. Used to be a good setup, but not liking it anymore. But the point is, for the past few days, the markets were down. SPY in particular is down like almost 30 points, like 410 to 370, more than 30 points. The Monster Energy, MNST, the stock, which is actually in a bull trend, is down like 2 points. Oh, this stock can be volatile. You can see a big swing from it. There are days where it went from $92 all the way to like around 85 or 86 to the downside. This is a volatile ass stock, but it was in a bull trend. So every time it hits the support, you might be meeting the buyers around that point. It's not easy to kill a bull. There is a saying, and there is a saying for a reason. So if you're going to swing setups, you got to look out for stocks which either hit a new all-time highs or which is in a bull trend. I know it's difficult to find stocks which is in a bull trend in a bear market, but I can show you 5 stocks on top of my head which hit new all-time highs before pulling back. Let's go to Merck. There we go. It just hit a new all-time highs like 4 days back, 112. Let's go to LLY. Another new all-time highs like around 374 a few days back. TRV. All-time highs before pulling back, which was like around 191 and change. I mean, I understand everything is pulling back right now along with the markets, but you will see buyers at every strong support areas. The risk is technically defined, so you can always get stopped out for a small loss if they break under it. So these are the type of trades you got to be in. Like especially if you're working 9 to 5 in particular, you can't keep an eye out for the markets. So you can just buy 100 shares and you can just buy a put as a hedge. If it goes down, let's say you buy TRV right now. Let's assume, I'm not asking you to buy, don't buy this, it's not looking good right now, but just an example. Let's say you're working 9 to 5 and you can't keep an eye out for the markets, yeah? You buy like 100 shares at $183.50. You'll be spending around $18,350, right? And then you buy an in-the-money put, which was around $700, let's assume 2 weeks out. So you buy the 184 puts as a hedge. So if TRV goes lower, they're gonna, and by expiration, let's say the TRV is at around $160. With this put as a hedge, the maximum you'll be losing, is somewhere around $100. Because this put which you hold, it's going to be acting as a hedge. So it doesn't matter how low the stock goes from there, they're always going to sell your 100 shares at the strike price of your put. Go check out the married put strategy video. This strategy is called as married put. There is a video in my channel. I even posted it in our Discord. Go ahead, check it out. If you're working 9 to 5 and if you can't keep an eye out for the markets and if you need to work on trading, you got to focus on the stocks like this, and you got to make sure to take advantage of the options. The main purpose of options is to protect your long-term positions, to manage the risk on the long-term positions, not to scalp, you can scalp, you can day trade, like there's multiple ways to trade, yeah. But if you're new to the markets, you got to understand the point of options. The main point of options is to protect your long-term. So check out the married put strategy, something really interesting, a way to manage your risk on your long-term positions as well. So let's go back to SPY ES and see what SPY is doing right now. Alright, flat. Nothing changed. SPY can't break about 380 here. Interesting. Struggling at around 380. Well, if they do break down, watch out for 378 as support to the downside. Under 378, you got to keep an eye out for 375 and change, which was the 3805 area as support. Alright, so if you guys have any questions, feel free to shoot it in the chat. Be happy to help. Look like I'm giving a monologue. Fucking hell. Right, so let's go to the Discord and see what the members are saying. Alright, so for intraday trading, what should we consider as explorations for calls and puts? Hey Angela, good morning. Thank you for being here, appreciate it. So let's see, is it going to be a turnaround Tuesday? What do you guys think? Are you guys holding any calls? Are you guys holding any puts? What are your thoughts on the markets? I want to know. Are you going live after close? I mean, if you guys want me to, it's all good with me. What should we talk about after close? Like maybe we should do this, like after close we can go over the early thoughts, early morning notes, which I post on the channel every single day. Maybe we can go over the price action on SPY and what happened, so I can explain what happened every day after the market close, so you guys can get better in analyzing SPY. I know most of you newbies just wanted to trade SPY nowadays. I don't know what's up with that. Especially if you have a small account, stay away from it. Oh, for futures. Oh, alright, I can do that. That's better actually. If you guys, I didn't know that you guys trade futures. We can do that. This happened overnight, by the way. Like we can do a live session for futures and we can start looking at plays and we can live trade maybe. That's a good idea. I'll keep a note for it. I'll keep an eye out. So scaled out of 377 puts for today. We will see if I care to keep the last one. I'm still holding that one runner in the put, which I shorted the SPY at 390 when they broke under it. So I sold a few at 385, I sold a few yesterday, and I'm still holding one runner, and with the stops at 385. So if they go to 385, well, I'll be out for $5. If they go all the way down again, well, that's a good R&R. So I'm still holding that shit until 372, which was the target, around 37.53 in ES, that is. So let's see. I held one call on SPY at market close with 380 strike. I hope it plays good, plays out well for you. Let's see. Let's see how it goes. At the end of the day, no one knows what's going to happen. But probability-wise, as long as SPY is under 380, we are going to see 377, 378.50, which was yesterday's lows, which we can see some buyers on. If they break under it, watch out for 375.42. 375.42 to 373 is the area where I am interested in going long on SPY. I don't like calls here. I like it here. 372.93 or 375.42 or whatever the equivalent of ES around. Let me show you. Whatever this area of equivalent on SPY is, which is around. If I go to the weekly charts, if I zoom out a bit, here, this area. I want this to be tested around 37.45 to 37.39. I do understand that there is a big area above at 3,800, so something to keep an eye out for. So let's see how it goes. If they offer me, I would gladly go long around that area. Long in the sense buy calls. SPY looking to be reversing, so it may go back to 380. Very likely, very much possible. Like ES is actually getting rejected at SPY equivalent of 380 here, which is at around 38.50 and change. So let's see how it goes. If they can't recapture it and if they keep failing around this area, I wouldn't be surprised if they come all the way back down to run a test at 38.28 to the downside. And if they break under 38.28, well, they are going to come down to 38.05 again. So into today, something to note, FedEx is reporting earnings. If you guys are interested, that is, like, FedEx is reporting earnings today after hours, and Nike, NKE, is reporting earnings today after hours. So might be some decent plays leading into, for at least for tomorrow's session, that is. Depends on the earnings. If they gap up, we can short it. If they gap down, we can long it. So let's see. So if you're wondering why the options premiums on these two plays, if you're trading this, are too high, they are reporting earnings. So It's pretty simple chart on FedEx actually. I'm not saying it's going to go down. Don't play earnings. Don't gamble on it. What month are you looking at futures? All right. The ticker for futures is ESH 2023. That's the ticker. So it automatically, if you go just press ES1, it's going to give you the current month contract, which is the same. So the symbol is ESH 2023. It's looking for the March contracts. The previous contracts expired before, so that won't work. So if you're using ESZ 2023, it doesn't work. So currently the March contracts are going for 38.33. This is the current contract, ESH 2023. So whatever the equivalent of that is. Let me double check on it. It's the same. March 2023. Right, we're on the same page here. So Netflix is selling off. Really? Let's see. They're at the support though. So let's see. 277. Important. So if they break under it, well, they're going to go all the way down to 264 and change. So if you're ballsy, you can long it here, but I'm not interested in touching Netflix until I see buyers entering in QQQ. I will wait for 255. Until then, no trade for me in Netflix. Not touching it. Not even going to look at it. I might as well just set up an alert around here, so I won't miss out on this move. Yep. If they come down to this level, I'll get alerted. So I might go long around that 255 zone. Until then, nope. No, I'm not going to touch it. Right, so let's go over the watch list one by one. Coin, nope, not interested. GPN, yep, we need to talk about this. This is a good candidate for shorts. If you want to buy puts, this is a good place. Do you remember me telling about this consolidation breakdowns? If you consolidate for a while and broke down something to go short on, this is a good candidate. This is the weekly chart. It was consolidating in a bearish flaggish pattern, and now they are breaking down. They closed under that range on last week, Friday, and now they open under it as well. So this is a good candidate to go short on all the way to either $88 or, best case scenario, we're looking at the support. There's no support here at 81 or 78. So this is a good candidate. So if you're interested, go ahead, take a look at it. RSI is still not oversold, so we still have more downside to go. It looks like a bear flag breakdown. You can just set your stop losses at $95 to the upside. And you're technically risking $2 to make like around $5 to at least 88 bucks. That's the first trade, or 288. You can scale out on your puts, first entry of puts, first batch of puts. And if they break under 88, you can leave some runners and then get out of the entire trade at around 78. So this is something I'm watching personally to the downside. The ticker is GPN, by the way, so you can, if you're not comfortable trading this, you can just like keep it on your watch list and see what the price action does, especially with the consolidation going around, and you can observe it. If it goes above 95, you'll get stopped out. So what, like you're losing like what, $100 maximum, but you'll be making like around 500 to 600 if it goes in your favor. So yeah, the risk to reward is pretty good. I'm not saying it will work. I'm saying there is a high probability of it working. So there's a big difference. JPN. Oh my days, the banks got absolutely wrecked for the past few weeks. Let me see. All right, JPM, patient breakdown. Interesting. All right, let me go to a cleaner chart. JPM, let's see. So they break down under 133, and now they are in this consolidation range. All right, so JPM is having this 128.40 as support and 127.39. So if you want to go long, let's say like you wanted to buy JPM. So this is a decent area to go long on, which is around 128.25 with stop losses at closing candles under 127.29. So technically you're risking like $1. And you can just take this move to the gap fill, which is around 133.14. If you're not long yet, I don't like it. If you're not short yet, oh no, the one which I spoke about before is GPN, Global Payments. That's the ticker I spoke about before. Now we are looking at JPM, totally different companies, totally two different companies. Like, so GPN, as long as it's staying up below $95, it's a short to the downside. So that's something I'm looking for. That the trade which I have in cards into today. I mean, I've been watching this since last week, but still, this week it's something interesting. Some interesting setup has been brewing around that. So that's something to keep a note on. And for JPM, if you want to short it under 128.25, go ham, because the most likely scenario is that going all the way to 123 and change to the downside. Not bullish on this chart. Technically, they're just consolidating. They might go all the way to 132. If they go to 132 and fail there, you can short it again. All right, boys. Thank you for listening to my ranting. I really appreciate it. The market is opening in 2 more hours. So, good luck. See you guys in the Discord. Okay, so SPY, the plan is pretty simple. As long as it's under 380, watch out for yesterday's lows, 378.50. Under 378.50, we are going to go to 375 and change. So, something to keep an eye out for. Leading into today, manage your risk wisely. Take high probability trades. Thank you so much for joining. I will try, I got the futures suggestion, so we will try to do a futures live trading. So that is a great idea. Thank you so much for giving me that. Like, I really appreciate it. It'll be helpful for the new members as well to see how the future contracts trade. So what's the difference between the options and the futures contracts at the end, right? So something interesting as well. So thank you so much for watching. Really appreciate it. See you guys in the next one. Peace.